So on the eve of what is expected to be the first rate cut by the Federal Reserve in almost a year, we have a couple of dynamics in play I wanted to share with all of you that I think everyone should be keeping a close watch on. The first is it's not just the dollar that is tanking right now. Dollar finished today. I saw the dollar index finished in the mid 96 range. Pretty good fall today, like 0.7%. That's a big move down for the dollar. Dollar's pricing in the Fed rate cuts. Rate cuts weaken the dollar. They not only weaken the dollar in terms of its purchasing power, but they weaken the dollar in terms of its view by other countries around the world as a place to park resources. And that's going to continue to unfold pretty quickly as we see the rate cycle, I think, pick up. What else is crashing? The credit scores of Americans and consumers in this country that have gotten themselves in over their head. Many, not by choice, but because they simply can't make ends meet. So they're using credit cards, they're taking out personal loans to just pay for everyday necessities, and they're not able to repay these obligations. They go into default, their credit scores get hit. This is going to translate into a whole lot of bad stuff that you didn't necessarily have present when the Fed embarked on its last rate cutting cycle. Before I jump into the article, appreciate you guys. If you're not subscribed to the channel, if you would please hit that subscribe button so we can keep growing the community. It's a free and easy way for you to support the channel. So, assuming that the Fed's going to cut rates tomorrow, either a quarter or a half basis point, it's not going to explain why. It's only going to help the wealthy. It's only going to help those with strong credit scores, strong balance sheets. And of course, it will help the federal government to service its trillions of dollars of debt at a lower rate. Okay? It's going to fuel more speculation in the stock market. Is it going to have an effect in the stock market where all-time high, after all-time high keeps getting met? It might initially, and then again, if you go back and look at history, that thing might turn quickly and the markets go down. I don't know. I want to hear your thoughts and input on that. But look at the average person in this country and the one struggling, and that is by and large a much greater percentage of the population that are in the upper echelon high-income earners, right? The 99% and down, especially those ones I'm going to share with you that have found themselves a casualty of a bad FICO score, they're out of the game. They're not going to be able to participate in the, let's say, benefits, if you want to call them that, to these lower rates. They're not going to be the ones able to go out and buy a house. They're not going to be the ones able to go out and get another line of credit to let's say, to do something they want to do or to improve, their property, HELOC, line of credit on their house or anything like that. Okay, you're going to see those defaults start to and continue to pick up. So you're going to have a dollar weakening. You've got a consumer weakening, both in terms of their income levels, their job security, and their ability to obtain and keep credit. Okay? At CNN today, credit scores drop at the fastest pace since, can you guess when? The Great Recession. Credit scores are falling at the fastest pace since the Great Recession as Americans struggle to keep up with the high cost of living and the return of student loan debt payments. The national average FICO score dropped by 2 points this year. That's the most since 2009, according to data released Tuesday by the analytics company. They're down for the second year in a row. FICO found that a growing share of borrowers are falling behind on car loans, credit cards, and personal loans. The findings, it says, underscore the growing disconnect between the euphoria on Wall Street and the pessimism on Main Street. While U.S. stocks continue, it says, to shatter record highs, a significant chunk of Americans say they're hurting. Okay, we've seen a K-shaped economy. Those with wealth tied to stock market portfolios and rising home values are doing well, and those and others are struggling with high rates and affordability problems. Tommy Lee, senior director at FICO, told CNN. And again, the ones with the stock portfolios and the rising home prices are also correspondingly the ones, guys, that have, for the most part, much better credit, okay, or excellent credit, okay. And so banks view them, lenders view them, credit cards, companies view them as much greater credit risks than the other, massive bottom tier. Average credit scores fell sharply, it says, after the 2008 financial crisis, as, here we go, unemployment skyrocketed and millions of Americans could not make their mortgage payments and defaulted on their auto loans. We're seeing this unfold now, but I think for different reasons. As I've shared, look at how many news articles there are today and news stories. If you've perused CNBC or Bloomberg or any of the major news outlets, economic news outlets, look at how many companies right now are putting billions of dollars into AI infrastructure. There's so many I couldn't even, share them all today if I wanted to, at least in the time I like to keep these videos. So AI is a challenge to the job market that we have never seen unfold like this, or never seen like this before, and certainly it's going to unfold at a pace I don't think anybody really is truly ready for. What's that going to do? That's going to further put pressure on people's credit scores, especially when they lose their jobs and default on their loan obligations. Credit scores increased each year, then it said, from 2013 up until 2024, when they dropped, according to FICO. And FICO found the delinquency rates on auto loans, credit cards, and personal loans are at or near their highest levels, again, going back to 2009, the depths of the great financial crisis. These delinquency rates, they say, are more consistent with an economy in recession than one still in expansion, according to FICO. Watch yesterday's video. Again, recession is assured. We all know we're already in a recession. Some even believe it's as bad right now as a depression. And I think history might turn out, look back, unfortunately, and say it was truly that bad. FICO found that 14% of Gen Zers have had a large credit score decline of 50 points or more in the past year. 50 points, more than any other year, and double the decline of 2021. And that's because a lot of them are contending with these student loan obligations that are now put on their plate, back on their plate, from the long hiatus the federal government gave them after the pandemic, okay? But in addition to the student loan obligations being put back on their plate, younger Americans are also contending with really what's turning out to be the most difficult job market, okay, or marketplace that we've had in years in this country. And that's especially true for new college graduates coming out of school. And those are the ones that have racked up a bunch of student debt to get the piece of paper that says they can do the thing and give the interview and get the job. But guess what? Employers aren't hiring, okay? About 1 in 5, 19% of consumers say they paid less or skipped bills to get by in the past year, according to a July survey by the Federal Reserve Bank of Philadelphia. That's up from 17% the year earlier. And FICO found that 64% of Gen Z and 61% of millennials with student loans rely on credit cards, buy now, pay later loans, or personal loans to bridge financial gaps. Of course, Klarna and Acclaim and all those other buy now, pay later companies, they're having a field day right now, taking advantage of these young people that are utilizing, overutilizing and abusing this buy now, pay later setup. And I'm reading more now, I haven't gone on and verified it yet, that the FICO and the credit report agencies are now going to be looking at buy now, pay later debt obligations as part of these credit scores. So expect the credit scores to get worse as people start defaulting on their 5-pay or their 4-pay for their big screen or whatever it is they bought, right? Or, their DoorDash, they can now put on buy now, pay later. Not going to go too long today. Let's see what happens tomorrow with the Fed rate decision and on how this is digested by the markets. I would expect, but sometimes everything gets flipped on its head out of the gates until everything settles in. I would expect the 10-year yield to drop. I would expect the gold to strengthen. I expect the dollar to drop. I would expect the stock markets to probably, go up. I would expect cryptocurrencies to go up. And, let's see how it all plays out. Those of you that are in this tough position, well, let's say those of you that are in a good position, credit strong, balance sheet strong, with a dollar being devalued as fast as it's now going to continue to be devalued, you're going to want to, from my layperson perspective, not financial advice, look at buying assets, holding assets that are going to outpace, the dollar's loss of purchasing power. Okay, and we all know as the Fed starts cutting rates, inflation is going to spike. Okay, it's the double-edged sword of this dual mandate. If you guys are in the position of this tier where your credit score is terrible, do something about it. Okay, there's ways to improve your credit score. There are resources to look into doing that, how to do it. And it all starts with, doing your best to stop taking on new debt, get a game plan for just chopping away little by little at what you have out there. Credit scores can be repaired, okay? But you have to make a concerted effort to do it, and you've got to change, the mindset. Not preaching to anybody. Been there, done that. I understand the process, okay? And I'm not going to share too much personal information right now, but my credit score is insane, and I get calls and emails every single day. These companies and whatever wanting to throw money at me. Other people aren't getting those opportunities, okay? Because they're just they can't. They're not credit worthy. So appreciate you guys watching. If you enjoy the content, please give me a like on the video, subscribe to the channel, leave your thoughts and comments. As always, with that being said, I'll talk to you all soon. Bye.